Welcome back. You're still tuned into Trading Hour. It's time to talk about market fundamentals. Rakshit Ranjan from Marcellus Investment Managers is joining us now to discuss just that. Rakshit, good morning. Thank you so much for joining in. And we're talking on a day when we're seeing gold prices surge, but crude prices come off from those higher levels at a 3-year low as well. These structural shifts that we are seeing right now, how are you looking at the markets at current juncture? We got the mutual fund data as well yesterday. Equity flows continue. Large caps have seen a big flow this time around. How do you see market shift the pattern now?
Yeah, so I mean, the way we look at broader economy to begin with is there's moderation in consumption, expenditure, quite across the board from small ticket even to large ticket. We hope to see that improve in future, but at the moment it's pretty weak. There is also, whilst last few years have seen pickup in government capex, transition of that into private capex is something that is yet to happen at a high acceleration. We expect that as well to happen, and we're trying to position our portfolios accordingly. So that's the economic backdrop. Things like crude oil, things like gold prices, at a stock specific level, to the extent that they matter, are more short-term phenomenon. Beyond a point, beyond say 3 to 6 months, they don't have impact on margins. The competitive advantages of the company that you're buying would have impact. That's how we are thinking in terms of bottom-up portfolio construction. So all in all, we're trying to pivot our portfolio towards companies which can allocate capital to benefit from the changes in the external environment. And India has gone through lots of changes where challenger companies, energized capital allocators, they are challenging incumbent dominant players, and we're trying to position our portfolios to benefit from those other structural trends.
So Rakshit, can you enumerate on these structural changes, either in the external environment or in the domestic market, the top 3 changes that would drive investment decisions over the medium term?
Yes, certainly. So think of it like this. In the last 3-4 years, superior physical and digital infrastructure has combined with things like GST, a structural drop in cost of capital as Indian families have shifted their savings from physical to financial. What that has done is it has kicked off 2 effects. One, smaller companies, they've started to push aggressively into the territories hitherto dominated by larger players. So for instance, in our portfolios, there's an Astral Poly as well, which is doing paints in a very niche way, right? Those are not trying to challenge the Asian Paints of the world, but trying to create their niches in peripheral areas. That's the first outcome. The second outcome is well-managed, large-scale franchises have realized that it's time to spread their wings, enter into industries which can offer them a challenger opportunity and create a massive space in addition to their core business. So for instance, a trend from being a West Side and then into apparel in Zudio, getting into grocery retail of Star Bazaar in a big way we see going forward, Tube Investments from auto ancillaries, core business, highly cash generative, getting into the EV space in a very interesting and commercial EV orientation rather than the passenger vehicle EV, etc. So those are some of the examples. And accordingly, I think the change that we are seeing is previously greatness was defined, according to us, by companies doing more of the same in a better way, in a linear manner over a longer period of time. From there on, I think greatness in future will be defined by the core business doing more of the same in a better way, but a lot of non-core getting added as extra layers to the franchise. So maybe a little lower ROC from not 40%, maybe a 25-30%, as newer businesses have relatively lower ROC during the gestation period, but very high reinvestment rates. Those are the kinds of businesses, I think, which will power up greatness at a fundamental level.
Okay. Actually, I was going to just ask you that in the shorter term, will we see lower returns coming in from these businesses which are extending or which are diversifying into newer businesses or new energy businesses that some of them are doing? Are there some risks associated with this diversification that we are seeing, say Astral entering into a market which is already led by, bigger companies, or for instance, Tube Investments getting into the EV space? We have a lot of these companies talking about maybe green hydrogen as a big source, but we haven't seen any outcomes so far. Do you think markets are already pricing it in way earlier than the results that will be seen?
No, I don't think the markets are pricing it in, but the risks do exist, and perhaps that's the reason why the share prices are not skyrocketing on the announcements of such diversification attempts. So the risks, as you asked, the biggest risk is capital allocation in a peripheral area is going to have more risks than capital allocation only in the core. Right, because in the core, if the company is dominant, it has created the right to win, which others cannot catch up with very quickly. Then the capital allocation decision will instantly deliver results. But in the slightly, let's say, a non-core or a peripheral area, you need to find synergies. You need to find the reasons why you will have a better right to win than anybody else who attempts to catch up as you try to be the challenger. So what you need is management teams which are incredibly focused, incredibly driven, very disciplined. That becomes a very big differentiator, rather than just systems and processes that might help you do more of the same. I think over a period of time, we are already seeing, and again, the names that you took, so Trent is an example. I don't think the market does not factor it in as the business progresses. It does factor it in, and we do expect to see that happen to many other companies in the portfolio that we've got.
That's a nice thought, Rakshit. The great businesses today are not just about doing your core business better in a bigger way, but also perhaps looking at expanding, into niche areas where they can build on the brand, the distribution, and so many other strengths of the large conglomerates. Thank you very much for joining us today. This is a story that we'd like to highlight to our